When figuring compensation for purposes of determining the amount of an allowable contribution to a traditional IRA, which of the following is an incorrect statement? So this question is specifically asking for an incorrect statement, so we're looking for a statement below that's false. So let's go ahead and consider the answer choices and pick the answer that is false. A. Pension or annuity income is not considered compensation for an IRA plan. So this is actually a true statement. Pension and annuity income is not considered compensation for purposes of determining the amount of allowable contribution to a traditional IRA. Since it's true, we can eliminate it. So A is incorrect. B. Earnings and profits from property, such as rental income, are considered compensation. So compensation is defined as earned income. When you think of earned income, you think of items like wages, salary, commissions, self-employment, taxable, alimony, and separate maintenance payments. Actual income where you're earning that amount. Contrast that with passive type income like rental income or portfolio income like dividends and interest, or ownership in certain entities like a limited partnership interest where you actually are not putting any time into it, and that's considered more like passive investment, which is not earned income. So this statement, earnings and profits from property such as rental income are considered compensation, is actually a false statement. So this looks like the correct answer. Let's consider C and D just to make sure. C. Interest and dividends are not considered compensation for an IRA plan. So we just went over this. And B, you have to contrast compensation, which is earned income, from other types of income which are not earned income. Interest and dividends are perfect examples of what's not considered income for an IRA plan. So choice C is a true statement, so choice C is incorrect. D. Generally, amounts excluded from income are not considered compensation for an IRA plan. So this is a true statement. We don't include amounts that are excluded from income. These are not considered compensation for an IRA plan. This is a true statement, so we can eliminate D. So the correct answer is B.